Hey, what's up everyone? This is Silver Slayer and welcome to your daily silver stacking video. Thank you for tuning in. Listen, channels like mine are definitely going to be suppressed on YouTube. They don't want this information getting out. That's for dang sure. So make sure you like this video, leave a comment, even if it's just a thumbs up or something, because obviously silver is a direct threat to the US dollar. Silver is a direct threat to everything that stands for a centralized system. And that's why they're going to push stock markets and student loans and debt across. Because if you're in debt, you're a slave to the system. If you're investing in gold and silver, you're taking the power away from them and putting it in your own hands, literally. And do you think they like that or want that to happen? No. Just like in 1980, with the Hunt brothers owning so much silver, they made a law on the spot banning silver, and then put the Hunt brothers in the spotlight as these evil criminals when all they were doing is buying a lot of silver because they knew the system was corrupt and they knew the truth. So the government had to do something to twist it and make them seem evil, just like they would do if they tried to push my channel in the news, somehow making it seem like, we're crazy and that some conspiracy. And we know the truth, and they don't want that to get out. So make sure you support silver stacking channels like mine or anyone else, that is pushing this information out there, talking about the reality of the financial system, how corrupt it is, so on and so forth. But anyways, we have a very good article, and actually two articles. This one doesn't have much information on it, but I did like the title, and they do talk about a little bit of this inflation, how it's posing a threat to the global economy, so on and so forth. But this one goes a little deeper. Now, I don't like how they misspelled silver, but it is a good article. Trust me. Just because they misspelled the word doesn't mean they won't make some good points. But yeah, the link to these two articles will be in the description. Make sure you're subscribed because the 50K giveaway entry video will be posted probably Saturday or Sunday. So make sure you have the bell clicked, or you will also miss that entry video. I would hate for that to happen, but it always does. People wish that they saw it in time, but they didn't, and they got to wait for the next one. So yeah, at a crossroads, it is time for gold and silver. Price inflation is rearing its ugly head, and that's worldwide. In the U.S., the annual increase in consumer goods prices was 5.4% in September 2021. In the Euro area, 3.4%. In China, 4.1%. It is not only rising energy prices that are driving consumer good prices up. The upward price pressure affects all types of goods and services. And this is pricing of food, clothing, furniture, etc. The inflationary development is also raging in asset markets. For instance, housing prices in many countries rise sharply. In the U.S., house prices were up 19.7% year on year in July 2021, while German house prices edged 13% year on year in the third quarter of 2021. So there's plenty of evidence that price inflation is very much alive and could even continue to rise. Against this backdrop, it is important to note that price inflation, meaning an ongoing rise in goods and services prices across the board, is not a natural disaster. Price inflation is man-made, the result of an excessive increase in the quantity of money. Quantitative easing, which stands for QE, money printing. The more money we throw out means we have to reprint more dollars. Weakening the dollar, making things more expensive, and also in the end means that we're just deeper in a hole. We're trying to dig ourselves out of a hole by digging a bigger hole, trying to get ourselves out of debt by replacing it with more debt. It's like trying to pay off a credit card with another credit card with another credit card, and not thinking about how you're going to fix it or what the solution is. There is no solution. There's definitely no solution. There's only an alternative, and that is precious metals. It's the only alternative because everything else is pegged to the dollar. It's like switching seats on the Titanic if you're trying to invest into stocks to get yourself out of this situation, because that's still pegged to the dollar. So when we're looking at, it's so true though. Go to usdebtclock.org and look at how many trillions of dollars of debt we're in. It's in the red, and it's never going to go up. It's always going down. The problem's only going to get worse. Every fiat-based system ever in history has collapsed, it's designed to collapse. And if you look at third world countries, they carry their money in trash bags. They weigh their money on scales because their dollar is so devalued that it's like the purchasing power of a couple pennies. So they have to literally throw over hundreds of dollars to buy something that's, $17 worth of value. And that's also why you see like the Zimbabwe $1 trillion bill. That's why you see some people in the streets, like in these third world countries, they'll say like broke billionaire because they literally have billions of dollars, but their money is so worthless, it means nothing. The United States, it's going to take longer to get there because we're a wealthier country. And the only reason is because we own more gold, and gold is deemed real value. So in their fight against and consequences of the politically dictated lockdown crisis, central banks around the world have slashed interest rates to historic lows and opened up the monetary spigot. And that's a result of a buildup of huge monetary overhang, money that has not yet found its way into higher production and or higher prices. And that's, for instance, we estimate that in the United States, monetary overhang is now around 20%. And in the euro area, around 15%, constituting a price increase potential of the same magnitude. To make matters worse, the U.S. M2 money stock keeps growing at a rate of 12% year on year, which means that the monetary overhang continues to grow. A similar development is also becoming apparent in euro areas. This strongly suggests that central banks will have to raise interest rates to keep price inflation from getting out of hand. However, it should be clear that a monetary policy of interest rate hikes and containment of credit and money supply expansion would be tantamount to an earthquake for the global economy and financial system, because the latest economic recovery has been driven by extremely low interest rates and a most generous supply of credit and money. And they're going to use, the virus as an excuse. But then next batter up is going to be the Green New Deal, which is also on a global scale, throwing money out left and right, especially from the stimulus. I mean, we don't have that money to give out, but what were we going to say? What were we going to tell the people? Sorry, you're out of job. You lost your job. We can't give you the money. We're too broke. No, they're going to do it anyways, regardless of the consequence, but there is a cost to pay, especially with the overspending of Joe Biden. Now, whether candidate A, B, C, or D won the election, we would still be in this situation, but he is definitely excessively spending a lot of money, making matters only worse. When the FOMC comes out with those statements, Federal Chairman Jerome Powell talking about interest rates and all that, a lot of times they throw out figures that are going to happen, or figures that they'll talk about in November, December that haven't happened yet, or even before they even make an announcement. People will speculate what they're going to say, and they'll make decisions off of that. And those decisions are turned into actions, which is an investment, and that affects the price. So a lot of times these prices aren't even real. They're fake prices. It's almost like a false flag, because people are speculating, assuming, theorizing on what someone's going to say or what's going to happen before it even does. And a lot of times that's not even what really happens. And that's why speculation is so scary in the precious metals market. So what if central banks don't end their inflationary policy? In the extreme, price inflation could spin out of control if and when market agents lose confidence in central banks ever abandoning their inflationary course. And it's scary because the USD, the US dollar, is the world's reserve currency. Every country across the world relies on the dollar's strength, but the dollar's strength has already lost 98% of its value, right? 98%, 44% in the last 20 years. It's getting way worse. So this in turn could lead to a brutal currency collapse. In all likelihood, central banks would not want to take such a risk. So at some point, they will have to put their money where their mouths are and raise interest rates. Any such action, however, will most likely be cosmetic in nature, right? They're trying to, and that is to do their very best to avoid bringing real interest rates back into positive territory, especially because global debt levels already crushingly high, and many borrowers could not survive in an environment of higher real borrowing costs. And I definitely think that they're going to try to, I guess, what would the word be? Cushion or try to, I guess, make things seem not as bad as they really are for for the simple nature of they don't want people to panic and freak out. Even though that's not the reality, we know the reality. A lot of people don't want to believe it, whether you don't want to acknowledge it, whether your mind literally couldn't handle the truth, or you'd probably go into a panic attack or a mental breakdown. That's the truth for some people, right? If they knew the truth, if they really believed what was in front of their face, they mentally couldn't handle it. So a lot of people believe in the system or call us crazy simply because they have to for their own mental sanity. And that's just sad, because that means that they're not preparing or doing anything to protect their wealth, like investing in precious metals. A lot of times preppers will use that example as well. People that say preppers put on their tinfoil hats, but all you're doing is preparing against a possibility. It doesn't mean that you are 100% certain. Some people think that way, but and a lot of times it's just making sure, just investing in precious metals, protecting our wealth against inflation. That's not a theory. That's a fact. That's putting your money in a time capsule as the dollar is decreasing in value. That's not something you have to put on a tinfoil hat for. Now, while physical gold and silver have fallen out of investor favor lately, they represent one solid option to shield your portfolio against the debasement of currencies. And what I was just saying, right? It's what I was literally just saying. The precious metal represents a true sound money. The exchange of value of gold and silver cannot be permanently manipulated downwards by central banks, especially not when times get really hard. What is more, physical gold and silver do not, in contrast to bank deposits, carry a counterparty or default risk. Right? It's that's not switching seats on the Titanic. Precious metals are sitting on the shoreline watching that Titanic go down. Last but not least, physical gold and silver make the investor independent from the financial system. Like I said, taking the control out of their hands, putting it into your own hands. It's trading hours and the procedures. So in summary, adding physical gold and silver to your portfolio at current prices makes perfect sense to those long-term oriented investors who share the view that central banking has actually arrived at a crossroads. And those who believe that the most likely scenario is the inflationary regime continuing to push its limits, a scenario that is much more possible or probable than the return to prudent monetary policy. So I definitely thought that was a pretty good article, made some good points. And like I was saying, a lot of times people just don't want to believe the truth, which is sad. But a lot of times people don't even know. Imagine those people. I do think it's worse, though, if you knew the truth and you decided not to believe it, rather than people that don't know. See, if you don't know, then you don't know. A lot of people don't even know about the dollar decreasing in value or the reality of our financial system. See, they don't know. They're living in la la land. They don't know, so they don't even have a choice. But imagine the people that knew and still didn't. Just like the people that knew when I was talking about Bitcoin being $1,200 back in 2016, 2017. On my channel, I was telling people to buy Bitcoin at $1,200. But a lot of people said I was crazy, it was a scam. And now look, Bitcoin's at $66,000. Imagine those people, how they feel now, kicking themselves in the butt. But imagine the people that didn't even know when Bitcoin was $1,200. They wouldn't be as mad because they didn't even know about it. But the people that didn't listen to me, that were calling me crazy, that would feel a lot worse, in my opinion. So yeah, silver yesterday settled 1.8%, and that's as long-lasting inflation poses a threat to the global economy. Prices paid by American consumers rose in September by more than expected, marking the sixth consecutive month of hot inflation. As a consequence, Federal Reserve officials likely to agree on tapering next month, as shown in the latest FOMC minutes. Upside in the metal was capped by elevated Treasury yields, prompted by hawkish commentary from Federal Reserve Governor Christopher Waller. So he also said benchmark 10-year Treasury yields hit a 5-month peak after Waller said that policymakers may need to adopt a more aggressive policy response next year to dampen down price measures. Waller also said in remarks to the Stanford Institute for Economic Policy Research that Fed should start cutting back its bond purchases or tapering in November. See, that's a theory. That is, they should start cutting back. Is that going to actually happen though? See, people will start making decisions off of these things, and that's not even that's not even in line that it will happen for sure. That's why a lot of these prices are just based off of theory, speculation, just assumptions, and that can go both ways. A lot of people are assuming the opposite, which can also affect prices as well. There's a lot of psyche in the psychological aspect of investing, since the way that you break down or interpret information then goes into your decision making. So if you're someone who's very anxious, worrying, fearful, do you think you're going to invest the same way compared to someone who's very cool, calm, collect, thinks glass half full, not glass half empty, looks at things from a different perspective, more open? No, those two people are going to invest completely different. Their outcomes will be completely different as well. So that's also why, I guess how you look at things is important as well. Becoming open-minded. Same thing with the Bitcoin situation. People said, oh, that was new. Bitcoin was very new, so they just assumed and doubted it. Or you could have looked into it further like I did, saying, there is a lot of potential here, and this could be, it's just depending on how you interpret things and if you want to become more open-minded, adjusting and adapting to the new world. So yeah, I'm going to wrap this video up here. If you thought this video was 1, educational, 2, informational, 3, at least entertaining, make sure to hit the like button. I post daily videos. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.